Hello, investors. It's been a good month for your portfolio. Your portfolio is up about 8%. A little bit of a lag on the index, but we feel it's a part of the strategy. Whenever you have a concentrated portfolio, you'll have some good months and bad months. Uh, our focus continues to remain on pharma, IT, specialty chemicals, and consumption. We saw a lot of beaten down stocks and sectors do well, but I think that is the cyclical nature of this market. So it's been a decent month, a good month of good recovery for us. And what's been very spectacular in this month has been the record FII flows. So we had 65,000 crores of positive net FII inflows. And that was what really propelled the market. But what shocked me even more than the FII flows was that the domestic funds were net sellers of 48,000 crores. And mind you, this selling trend has been going on for the last few months. So there's an immense mismatch between what the foreign investors are doing and what the domestic investors are doing. Domestic investors are extremely nervous. Whomever I speak to, and I speak to investors every day, everyone has the same question that, your market is very, very different, or it's very, very disassociated from the real economy. So let's again address this problem. We spoke about that a few months ago, but I think the need to touch up in view of this massive FI, which was a record. Till today, we've never had a single month of such large 65,000 crores positive and such a large domestic sell. So I'll just share a screen with you as to what I think is the characteristics of this bull market. So this is a beautiful quotation by Sir John Templeton, where he talks about that bull markets are born in pessimism, grow in skepticism, mature in optimism, and die in euphoria. So what he really talks about the fact that there are 4 stages to every bull market, and every bull market is sort of demonstrated or exhibits an emotion. For us as investors, it's important to see that what is the emotion or in what stage we are in. So if we graphically put it, it's something like this, that in March, we had the whole fall, which happened due to this unknown new thing called COVID. And there was extreme pessimism. And that includes all of us, because this was not just a financial crisis, this was a humanitarian crisis. And we were all very pessimistic. The markets bottomed out. The markets always bottom out in extreme pessimism. And what we are right now seeing is a very big up move. And this move is represented by the skepticism stage. Domestic investors are very, very skeptical of this bull market. Most people are sitting on cash, waiting for a largish correction. In fact, people have just, can't figure out how come this market is going up. So this is a stage when the market defies most people's sensibility and moves up. Then after a point, the real economy catches up. The numbers that start emerging, the commentary that starts emerging is good, and people turn optimistic. And this is when most investors start coming back. So these negative numbers will start turning positive only when people start seeing news or some commentary which is optimistic, and we reach a stage of optimism. And finally, when everyone and his uncle is in the market, everyone is giving you tips, the worst quality kachra moves, that is euphoria. And that is really what creates a top. So these are typically 4 stages of the bull market. And as investors, I think the crucial question for us is to answer where we are in these 4 stages. I personally think that we are in this stage, the stage of skepticism. And my reasons are that what we see is very similar to what we saw post the 2003 fall and the rally that started after that in 2004 and 5. So what are the traits and why I feel we are in stage of skepticism? First and foremost is what I laid out to you, that there can be no greater demonstration of the fact that people are skeptical than the DII sell number. As I said, we had a 48,000 crore sell number by domestic funds last month. And that is a record. So this is really a clear demonstration of the fact that people are skeptical. Domestics are selling. However, in spite of the market being at lifetime highs and being such a roaring bull market, there is no leverage. Leverage means that when people are going crazy, in the F&O market, people are borrowing money, putting in IPOs, people are standing in queues to just get into stocks. That is a stage when there is margin funding, F&O limits, and at the moment, when people are sitting on cash, where is the question of leverage? Net leverage. So the thing is that I, for one, have always subscribed to the thought that the top of any bull market is caused by leverage. When weak hands extend themselves more than it is their ability, that is when tops are happening. And today, leave alone leverage. In fact, people are sitting on cash. In fact, people are selling and waiting for a correction. So that is why to have a major top, you need to see a lot of leverage, which is not there now. The third thing is market breadth. The last 2 to 3 years, the market has been very narrow. It's always a few sectors that have really sort of, dominated the market. But what we are seeing is that the market breadth is widening. More and more sectors are performing. Even down the beaten down sectors have started performing. And for a bull market to sustain, it's very important to have broader participation. Whether it is the number of stocks hitting 52-week highs or number of sectors that are participating. And that is, again, a very optimistic and positive sign. And fourth, most importantly, is that for any sustainable bull market, you need the economic cycle to turn. As you know that we have been struggling on the economy front. Whenever we felt the economy was ready, we had some issue, whether it was demonetization or COVID or GST. Again, the numbers that are coming, the macro numbers, the high frequency numbers are quite impressive. In fact, it is surprising. And it may seem, again, very early that we may have the green shoots of an economic revival. So looking at all these factors where, as I said, skepticism dominates the market, it is very important for investors to not be bearish or pessimistic. Corrections will come. Definitely the market, the way it is going right now, will correct. However, how do you time your investments? And everyone thinks that the market will correct, they will get a chance to buy and the market will go up. It never happens. I think the most sensible thing for you at this stage is to use the corrections to invest if you're an active investor, or if you are in the allocation play. The important thing is to do a systematic transfer plan. In other words, if you have to decide on a certain allocation X, make sure that you are able to allocate that money and in a systematic manner transfer it into equities at a given time interval. So at Marathon Trends, we have also started this systematic transfer plan. What a systematic transfer plan does is that you ultimately decide to allocate a certain money or top up in equities, and we transfer that money from the liquid fund into equities at a certain constant interval. This helps you that you do not take the risk of getting in at the top or getting it in a chunk and then you see a bit of a drawdown. Nobody knows what is the top. Nobody knows how deep is the correction. But the important point is that if we are in an early stage of a bull market, the important thing is to be allocated. So with that, I'm sharing my thoughts for the month and hope we continue to see great times ahead. Thank you. Stay safe. Enjoy yourself.